This is Ant Lyons from Your Property Network magazine, and I haven't actually done one of these interviews for a while. I've kind of been brought out of retirement, so it's nice to be back, and it's nice to be back talking to an old friend of mine and an old friend of YPN's as well. So on the call today, I'm talking to Tom Henderson. Hi, Tom.
Hey, Ant, great to be here.
Welcome back. It's been a
Thank
while.
you. Yeah, it feels like a lifetime ago, but it was only what, 3.5 years, something like
Yeah,
that.
that is a lifetime ago, kind of
It-
many lockdowns ago, shall we say?
yeah, yeah, definitely.
Yeah. So the purpose of today is to kind of look back very briefly on what you were doing when we last did our interview,
Yep.
and actually to sort of do a catch up really and say, okay, well, what have you been up to over the last couple of years? How's the business changed and adapted? And then we're looking at some fantastic case studies today, and it's kind of I think we've got three to look at in detail.
Yep.
Really, really different types of deals, and then the sort that we love at YPN, the kind of the innovative stuff, that out of the box thinking, where you get creative and find a way to make money out of property because that's what we're all about. So,
Yes, definitely. Yeah, sounds great.
okay, so and obviously this has been recorded, and I think the audio goes on the app and the video goes on the app as well, so people can listen and watch this as well as read all the details online, either on the app or in the hard copy magazine. So,
Awesome.
okay, so when we were last doing one of these interviews, tell us what you were up to then. So you're building your own HMO portfolio,
Yep.
but also doing it for other people in a particular niche as well, weren't you? So tell us, and that was about 3-4 years ago, there or thereabouts, yeah?
Yeah, sure. So, I mean, the last time we spoke, I think it's about March 2018, something like that. I was kind of relatively new to HMOs. I'd done maybe two or three. And the article itself was about I'd done an HMO, a boutique HMO, and managed to sell it to a Hong Kong client, kind of based on a yield basis, really, a bit of bricks and mortar, but also a bit of a yield basis. After that, I actually kind of went down the route more so of portfolio building for international clients. So whether they're from kind of Asia, India, wherever, predominantly mainly kind of Hong Kong and China, but we had a few clients from all over Europe and all over the world, really. So after that, I kind of went down that route of portfolio building, so offering the sourcing, the refurb, the management on the back end, which I passed over to kind of local letting agents based upon what kind of sub area it was. Yeah, and just kind of really got heavily involved in that while still building my own portfolio. But what I found that the money made in that would cover money left in my own portfolio or pay for a renovation. And so they kind of went hand in hand, really. So since then, really, up until kind of recently, that was predominantly what I was doing.
Yeah. So building a portfolio for other people, building portfolios for other people, and using the money that is generated by doing that to go into your own portfolio, money left in if you're refinancing or cash flowing a refurb or whatever. So as you say, the two go hand in hand. But it's always that, I guess there's always that difficulty in spreading yourself too thin. Was that a challenge for you?
Massively so. I think it is for everyone when they get into no matter what type of business it is, you try and do everything yourself and that looks great, that looks great, that looks great. But the reality is you've got to try and I always say to kind of previous mentees I've had, you've got to find a niche and try and stick with that and exploit that niche, really hit something and hit it hard. Because I remember back really kind of when I started getting into this properly, I wanted to do serviced accommodation, I wanted to do commercial, HMOs, buy-to-lets, everything. And the reality was, I kind of did little bits of everything, but didn't really get anywhere with a lot. It was only really when I started niching down on, and my portfolio mainly consists of 2 or 3 postcodes. So the same type of property in 2 or 3 postcodes and within kind of half a mile of those postcodes. And only when I really started niching down on those areas, on a certain strategy, on kind of the same purchase price, the same reno, the same generic end product, and started rinsing and repeating was when it started to progress at a faster rate.
Okay, and when we were sort of chatting offline yesterday, I guess sort of two things went hand in hand. It sounds like that you were. It was difficult to build your own portfolio whilst you were busy doing this for other people, and
Yes.
the pandemic hit as it hit all of us, and that made actually kind of meeting and connecting with your international clients a challenge at that point as well, because you did a lot of face-to-face stuff as well, didn't you?
Yeah, a lot of face-to-face stuff, primarily in London. And yeah, so COVID hit. We were not expecting that. We weren't expecting anything what kind of came off the back of that, let alone the price increase. It's difficult to find products now which are of a certain value. But yeah, so that came around, and I was kind of contemplating giving up the whole portfolio building side of the business for probably 6 months prior to that, because my properties were always put on the back burner, because obviously client stuff comes first. You've got a product to deliver, you've got a service to deliver. So my stuff was taking 3 times as long. The refurbs weren't as good because you didn't have a full concentration on it. So as COVID hit, all international travel stopped. I just decided to made the decision to stop doing that and solely concentrate on my own stock. Which, looking back, I'm delighted I did, because my stuff's kind of gone a lot faster now. And isn't that the end goal, really, to the majority of people, to build a portfolio and live off the passive income?
Yeah,
So
and it's funny, isn't it? Because people say passive income, and I think, and then other people say, "Oh, it doesn't really exist. Passive income doesn't really exist." And I think, well, I've got a couple of different businesses. I've got my own portfolio. We've got the magazine business, and I own a couple of gyms as well, and then we've had
awesome.
a sort of development company as well. And I think of all of those, the property is by far the most passive. And so it's completely passive, but it's a lot less hands-on than the others. So although some people don't like that passive income thing, let's be honest, it's what we're aiming for. So
it is, and I think compared to most, it is passive. But if you go down certain strategies, if you go into huge commercial, for example, or industrial, and you get kind of repair lease and contract things with social housing companies, it can be literally set and forget. But I think HMOs definitely aren't passive to a degree. I think the student market can be, but then again, you've always got your wear and tear, you've always got your non-payers, you've always got other issues which do crop up.
But that's the business, isn't it? And that's the business.
It is.
And,
It is. Yeah. Oh, I love it.
Yeah. Well, that's great. And your model, we're going to sort of start to understand your model as well. You're aiming, in a nutshell, like probably all of us, really, to be able to buy a property, to add value to it, to be able to refinance that and get as much of that money back out as you can. Hopefully all of it, but we normally leave a bit in, and then to be left with a cash flowing asset that's got equity in it, and you have a sort of a target that you want to make from a sort of 4-bedroom property, don't you? Of how much a month would that normally be, roughly?
Yeah. So generally, I kind of target 250 net per tenant per property. So I love 4 beds. The reason being, it's got multiple exits, so you're not debting the asset at a hugely inflated commercial price, especially on an asset which is more like a house than, say, an office building which is being converted. So in the future, you have got those exits, so you can sell on open market, sell to another investor, turn it back into a family home, and the numbers kind of still stack a little bit. So yeah, 250 net per person per property. So on a 4-bed, that would be roughly $1,000 net a month. And so on, kind of scaling up the ladder, really.
Yeah. Okay. Fantastic. And it's interesting because when we look at the numbers, because we'll talk through a case study in a minute, and we're not going to say exactly where it is because you told me that.
Yeah,
I promise that I won't. So
everybody coming up here,
yeah,
it's hard enough to find properties at the moment.
Yeah, a horde of YPN readers banging on doors asking if people are going to.
You joke, but there will be.
I know. So, but actually, the values. It's interesting that the values are kind of relatively low, so you can get really good returns on it. So we're going to. In fact, let's jump in on this case study. Will be a good one. So just tell us about this. So this is one of your boutique HMOs aimed at what tenant market, first of all? Who lives there?
It's kind of more your blue collar work. I mean, I've had everything from. I've actually got a professional boxer in there at the moment who's on Sky Sports. It's called. I don't.
You're not going around to collect the rent if he doesn't pay.
Do you know what, Ant? He's actually a really, really nice guy.
I'm sure he is. I'm sure he is.
Yeah. I mean, you see, I think it's that discipline they've got to have, isn't it? The kind of the mental discipline to get to that level. But yeah, so I've had from boxers to solicitors to doctors, all the way down to people working blue collar workers in factories, which is probably, I'd say, the generic tenant type, kind of Eastern European factory workers. And again, the cracking tenants, the kind of, a lot of them have come to this country for a better life, just to work hard, and earn some money, really. So I'd say that's generically my tenant type. Also, a really good tenant type we've found, and we discussed this yesterday, is your 40 plus divorcee men. The reason being, they want, from my experience, from what I've seen, they kind of want it easy. They want to just go, right, that's my payment for the week, for the month, whatever, and that's everything sorted, from council tax to electric, gas, water rates, internet, everything. So that's kind of the generic tenant type I go for.
And sadly, getting divorced in your mid-40s is not going out of fashion. So
no.
Okay. So this property. So you're based around South Yorkshire, and that's as much as we're going to say about it. So, So how did you find this one, and what was it on the market for, and what did it look like when you found it?
Okay, so it was off market. I've actually got 4 on that street now, which are kind of all boutique HMOs. There are a few more coming available, but I think I've kind of saturated that street to a point now whereby I don't want any more going on there. The first one I found on that street was on market. Needed a lot of work, managed to negotiate purchase of, on that one, I think it was kind of like 54, 56. And all the purchases have been between 56 and 63. But this one individually, we got it. How do we get it? I think it was just becoming known in the area, really. Chatting to all the neighbours, knocking on doors. There's a little old lady called Jean on that street, actually, who I've helped now and again, take the bins out, things like that when I'm around. And she's the eyes and ears of everywhere around there. So if someone's thinking of selling, she knows before they even know they want to sell. So it was kind of chatting to this lady, and she said, "Oh, number X, Y, and Z is potentially thinking of moving." So just go knock on the door and say, "Look, we've heard from her. Are you potentially looking at selling?" And it went from there. Yes, they wanted to sell. We negotiated a purchase and put it through from there.
Okay, fantastic. And this one was for 60,000. That's right, isn't it?
Yes. Yep, 60,000.
Yeah. And we get all the numbers in detail in the magazine. It's much easier to see them in print sometimes.
Yeah, that's
we've
fine.
We've got some legal fees on there and stamp duty and that kind of stuff as well. So that's another sort of £3,000 pounds. And then we've got the works that need to be undertaken to get it compliant as an HMO. So what did you need to do to it to get it ready to let?
Okay, so the property itself was structurally sound. It was a good property, just dated. You know what type I mean. So we don't tend to knock everything back to brick unless it's an absolute derelict property. But everything ripped out, old skirts, doors, bathroom suite, old kitchen. Normally we take all the pipe work out and put new in, all wallpaper stripped. And then it was just start fresh, really, repipe it all, new boiler, new kitchen. What we do now on all of them is brand new electrics throughout. In the early days, we used to go, right, can we try and add, how do I add smoke alarms? Can we try and add the emergency lighting? But you always come up against a few problems. And then by the time you know it, it's the same cost as if you just rewired straight from the beginning. So rewired it all to HMO regs. And then just like a normal house, really, kind of went on from there, all your stages up to furnishing.
And can I ask, was it a 4-bedroom when you bought it, or did you turn it into a 4-bedroom?
Okay, so as I'm sure you know, I'm kind of the old style Victorian terrace houses, which is predominantly what it is in South Yorkshire. You've got 1 room, 2 room, kitchen off shop. You kind of like got 2 and a bit rooms upstairs, and we try and get them with the attic conversion. 9 times out of 10, they're not very good attic conversions, so you may need to put a new staircase in or just kind of rejig it. But as long as it's structurally sound, that's the bulk of the work done. So what we do is put a stud straight from the front door, create a room there. That's bedroom 1. Then you've got the living dining area in the center room, and then the kitchen, which we lintel out and create a big kind of open plan living area. You go into the middle floor, you've then got front room and second room. So normally the front room's quite large, so we stick an ensuite in there. The back section is a very small bedroom with a bathroom. So what we do is knot them together to create a nice big ensuite room. And then the top floor, again, just bang an ensuite up there, and you've got a fourth ensuite bedroom.
Okay. So you're doing them all ensuite then, or including the one downstairs, or ideally?
Yes. So the one downstairs, what do we actually do? So we stole probably, I don't know, 2 or 3 square meters off the center room, and kind of, linteled out and turned that into a bedroom. Bathroom, sorry.
Bathroom,
So they've all got kind of 4 en suites. It is more cost effective, but we've found because I've got a few which are, say, 1 en suite, 3 sharing 1 bathroom, and they're just a lot harder to fill when they become vacant. Because as the market's developing, you've seen what happens. You go back 20 years ago, it was eggshell magnolia boxes. Now they're like mini HMO, mini hotels, aren't they?
They are, yeah.
So it's kind of the top end of the market that I'm trying to hit.
Top end of this particular market, I imagine. I mean, we always say whatever you're doing, it doesn't have to be the best in the city, but it has to be the best in the price bracket, or it has to be the best in your particular market. So it sounds like exactly what you're doing there. So
exactly.
You spent sort of 63,000 buying it with the legals and stamp duty and so forth, and I think your renovation costs on this one come to another £23,000. So this one owes you 86,000, as it were. So and we've got a revaluation figure, so remortgage valuation figure at 110,000. Is that done purely on a bricks and mortar basis, or part commercial, or how
bricks and mortar? Really, I'd say the bricks and mortar is around 105, because of the higher cash flow and because of kind of the asset type it is. It does get that slight premium, but I don't bank on it. I never kind of work my values off a commercial valuation at that level. Kind of when you start going 6, you get hybrids, 7 onwards, you're starting to get more commercial. But at that level, just complete bricks and mortar.
Okay. And we'll just chat through the numbers, because I always think it's really useful for people to benchmark, isn't it? They're looking at numbers in their own areas. So so in this instance, you're getting a 75% loan to value mortgage, so 82,500. So it's left £3,500 in the deal. Not a lot of money. And then you're renting at sort of between £100 and £115 per room per month. So that gives you per room per week, and that gives you 1,885 per calendar month. And after you take off all the costs, and we won't go through them all necessarily now, but you've got your the bills and a bit of maintenance and voids and so forth, and your mortgage costs. This one gets £898 a month of net profit, which on a return of having left £3,500 in is phenomenal.
It's short, 4 months, something like that.
3.5 months or whatever, isn't it? So
it's a solid return. And then what I like to do as well in the costings is you've got management, obviously, which I've actually brought in house now. It's become kind of that point whereby it's more financially feasible to bring someone on board. And I actually brought my mother on board. It's like she was made for the role. She's she's great at it. So she's been brought on board. At least the money's kept in the family then. Great at what she does. 5% aside for maintenance, because HMOs, they do have maintenance, a lick of paint every other tenant, and I've had some tenants who punch holes through walls and all that sort, but we're not going to go into that.
I mean, that just happens. So that just happens.
It does, but that comes down to the vetting process, really, doesn't it? Making sure it's really stringent.
How do you ensure that your tenants kind of get on okay? Do you think them having the en-suites, that makes a difference, and there's less sharing? And do you have to get involved in too much sort of inter-house management, or can you kind of leave them to do that a bit?
Generally, you can leave them to do what they want, because we try and, over the kind of the different HMOs, you try and fit the tenant type. So one of them, for example, has predominantly kind of sub 30 people who maybe they like a drink, a few beers, might have a mate round now and again. Another one is your more distinguished people. I mean, we've had someone 70 years old in there. So they are kind of, your mid 40s upwards, different stages of their lives, aren't they? So we try and match a tenant with a property at the same time as making sure it's desirable for them. And the ensuite stuff does definitely help. There's no arguing over he's not cleaned the shower, he's done this, she's done that. Yeah.
He's nicked my toothpaste or all of that.
Pardon?
He's nicked my toothpaste and all of that.
Oh,
kind of
Jesus. And some of the, I mean, we said it yesterday, some of the things you see, you don't know how these people get dressed, but yeah, it's not everyone.
No, absolutely. So, okay. So, I mean, I love that. You know, it's a boutique HMO. It's serving a market who are much in need of affordable accommodation, decent quality affordable accommodation, and I'm guessing that's why your rooms are in demand, because you're able to provide that. And so taking the time away from building a portfolio from other people, it enables you to do more of those types of deals, I'm guessing, to kind of focus in on core growing your own portfolio. So but you've also got some kind of left field stuff as well that's come through, and these are the ones I really like sort of talking about. So I wanted to talk about the building plot for an apartment that we chatted about yesterday, which is a straightforward flip. You know, the one thing I love about it is that, you know, you haven't had to do anything to this. It's just spotting an opportunity. So, so tell us about what it was and how you came about this one.
Yeah, sure. So in an essence, if you can picture it, and it is a stunning block as well. Beautiful block of 9 apartments on the outskirts of my area, facing the countryside. And these apartments, selling price, they kind of go for 100 up to 120, depending upon whether it's 1 bed, 2 bed, and the quality of the asset. I actually found this because I sold a few HMOs as COVID hit, because prices went like that. So if you get offered the right price, go for it. So one of the buyers actually of one of my HMOs, he sold, and we got chatting, connecting as you do, and he told me he had owned the freehold of this block. So I was like, all right, let's go have a look at it. Just out of interest to have a look at it and just have a look around. And when I got there, he went, oh, by the way, I've actually got this undeveloped part of the property. I think it's got planning, I'm not sure. So he showed me this. And I mean, it is completely undeveloped. So
is it attached to the main block of apartments?
Yeah. So it's lower ground floor, but it's not basement.
Okay. Yeah.
You kind of go down, and on the other side, it's all open, overlooking fields. So we had a look. We did a little bit of research and found it had actually got planning applied and approved for a 1-bed apartment there. So we got into discussions, negotiations, and agreed a price that he was happy, because he didn't even really know about it. So it was money in his pocket for nothing really, and I was getting a kind of a plot really at a good price. So we negotiated and ended up on 14,000 for me to go, right, there you go, I will kind of take the freehold of that. I had kind of all intentions in the world to develop it out really, and because if it's got a DUV of 100 grand, 110 grand, it's got the margins there. But then obviously other things come in the pipeline, as we said earlier, spreading yourself too thin. So I ended up just going, right, let's just stick it into an auction. And I probably visited the property once, maybe twice. Got some drawings made, some beautiful CGIs off Fiverr. It cost me all of, I think, 50 quid from someone in the Philippines, and they did a cracking job. Put it into an auction and ended up going for 28, which was great.
Wow. And nice little profit after you paid the auction fees and all of that, sort of £12,500, I think, profit on it. And
it was something like that, yeah.
Yeah, and probably in total a few days' work, I guess, kind of spread out over a period of time. So
yeah, and I mean, it's not going to make you a millionaire or buy that Lamborghini overnight, but it pays for a couple of kitchens and a couple of bathrooms, or kind of that's the way I look at it.
Yeah, and it's a kind of fun one as well, isn't it? It's a different thing. It's a different thing. So, and I guess also goes to illustrate that you never know what the next deal might be. You might go to look at one thing, and something else entirely different comes from it. So
Yeah, you never know, do you? And that's what it's about, really, just kind of spotting the opportunities and capitalizing on that, as opposed to not just having blinkers on. If you see an opportunity, grab it.
it's difficult, isn't it? Because as you said earlier on, you almost have to be laser focused to get your model and to be sort of uh, getting on and building that business rather than jumping around between service accommodation and developments and new build and all this stuff. But at the same time, have an eye open, have that laser focus, but have an eye open of, hang on a minute, maybe I could do something with this. And that's quite that sort of open-minded discipline. I think is actually quite difficult to achieve. I would think. So.
And it was 14 grand. It's not like I'm going, right, we need to find 250 to put into that. It was kind of an easy out, really. I'm very much on, it needs to have exits. So worst case scenario, I build it out, sell it, refinance it, it'd be all money out. The exits were there to make me comfortable to invest in it.
Okay, perfect. And the next case study that we're going to talk through, now everyone's going to have their thinking caps on. This is they're kind of getting creative, and I think it really illustrates the. Well, you said yesterday, didn't you, that the most important thing when you sort of talk to a potential vendor or whoever it is to understand what they want to achieve and try and build a deal around what they want out of it and how you can help them get to where they want to be.
Yeah, creating a win-win pretty much.
Yeah, okay. And this, I think, kind of goes above and beyond what most people would consider doing to get a deal, really. So tell us about this property and the gentleman's situation and what he was looking to achieve, and just tell us about the deal, I guess.
Right, thinking hat on. It is quite complex. So, in essence, I do a lot of marketing. Got this off the back of a letter. So went round to see the guy. Unfortunately, his wife of 50 years had passed away quite recently, and he'd lived in this property for the past 50 years, really, since they got married. So kind of an older boy. He just wanted, not a fresh start, let's not say fresh start, but he wanted to just move on, really, and kind of go to another stage in his life. So he wanted to downsize. South Yorkshire is infamous for having steep stairs. They are like the pyramids. So he couldn't really get up and down anymore. He just wanted a ground floor apartment somewhere. Well, he'd already kind of knew what area he wanted to go to, somewhere close by. So we got chatting, and in essence, we agreed that I would help him find a new apartment, negotiate with the letting agent, help him move, organize all kind of the moving of it, organize the new agreements, and explain it all to him, because he'd been in his house for 50 years. He'd not really experienced anything outside of that, and nor would he need to. So we agreed that. We agreed all that side of things. And how do I describe it? We also agreed that a purchase price, pretty much. So we agreed on a purchase price of £25,000, which was still a very good price for this property, considering, even though it did need full works. But it wasn't just a straight purchase. What it was something called a pay down lease option. So we agreed 25. We then agreed that I would pay his rent ongoing at the new place, and that would get deducted off the final total of the purchase, £25,000 purchase price, when we decided to close the option. So then it just kind of went from there, really. It was good condition, it was just dated. So boiler was sound, electrics were sound, they were all certed, had an EPC done, and got to a stage where I could move a tenant into that quite promptly, who was actually waiting for another one of the single lets, which was going through a renovation. Moved them in at, top of my head, I think it was about £425 a month. I was paying him £450 a month. So in an essence, this property was only costing me £25 a month, but it was still pulling £450 off the base property purchase price.
Yeah. So as your sort of new tenant, your interim tenant is in there paying their rent, that's coming off the purchase price of this property in there. Now, I wanted to ask you at this stage, I'm guessing you've got a good solicitor on this, because most of them are just going to go, you want to do what? When you have this conversation, I guess you've got a fairly commercially minded property lawyer on this.
Yeah, the guy I've been using since day one, and I recommended him to kind of everyone who's come our way. So it was in essence of going, right, this is what he wants, this is what I want, two sides of a paper, and going, David, can we make that work? And he's a man of very, very few words. So he just looked at me and went, yes. And that was it. And kind of made that work as financially feasible as we could.
Yeah.
So the tenant was in there for, I'd say, around 6 months, until this other property was ready. Moved that tenant from that property to that property. And then the works began, really.
Yeah. And this one you're keeping as a single let, yeah? Because you looked at some different options.
Yes.
Because
I completely forgot about that bit. Yeah. So while that tenant in the 6-month period was in, let's call it property A and property B, in property A, the owner of property B, or kind of the owner's daughter, came and had a chat, and she was like, look, my mother's unwell, she's going to be moving into care, would you be interested in buying this house? So of course I would. It was just as dated. I think she lived there a good kind of 50 years as well, so you can imagine kind of the condition. Agreed a purchase of 46.5 off the top of my head. So once both assets were kind of not owned, but that was on a lease option, that was owned, that was ready to be owned when we wanted, it opened up kind of a hell of a lot more doors, really, to go, right, what can we do with this? Because it's now 2 houses creating a considerable plot. So not option A, but kind of the first option we looked at was an 8-bed, 8-bath HMO, which is perfectly located. It could have been done quite easily. Would have had to go into the attics of both, but it's not a problem. Also, it could have been commercially valued at a much higher rate. I completely decided against that, just because I'm quite HMO portfolio centric at the moment. I wanted more diversification, because safety comes in diversification. So decided against that. The next option was to convert it into 5 one-bed apartments. After running all the numbers and the increased build cost, the opportunity cost of the capital tied in, the risk associated, I think the 5 apartment and the increased mortgage cost at the higher rate, they only came in about £150 net cash flow more per month than if it was just 2 basic buy-to-lets. So for me, that doesn't make financial sense, really. Kind of the risk reward ratio, another couple of grand a month. So then option 3 was you just turn this 2-bed and this 2-bed into 3-bed properties, really. So just normal buy-to-lets, and that's what we're doing.
And as you said earlier on, it kind of fits the model that then you can, they're easily sort of disposed of if you want to sell them to a residential buyer or whatever. It becomes a different beast if you've done an 8-bed HMO together, and or even as apartments, you've got to break them down and sell them off separately. So I mean, I love this one because it is a real win-win. This guy is obviously in a situation where he's not used to dealing with letting agents or going out there and getting references to be able to rent a property or whatever it is, and that you were able to help him to sort of move on into a new place that he's happy in, and he gets what he wants in terms of selling the property and it being hassle-free. So I love the sort of creativity of this one. It almost sounds like you could kind of offer this as a sort of moving service or something.
Well, it was literally, you had to get a van, had to do everything, but look, he was happy. He just wanted gone. He had no mortgage on the property. He just wanted just to leave and kind of leave that stage of his life behind him. So it was great, and it worked for me. It worked for him.
Okay. And I wanted to ask as well, now that we're in the sort of hopefully post-pandemic, hopefully sort of, we'll see. But for now,
I really do hope so. I need to go skiing sometime, but we'll see.
That's all I've talked about for the last. And in fact, very briefly, I'll save this one. I'll talk about the skiing thing when we finish the recording, because ski on here. But it's very much what I'm looking forward to as well.
Yeah, definitely.
So now that we are, in a position right now where we can move around a lot more, we can have meetings back in London and maybe meet overseas investors. Where are you now with that? Are you going to go back and do some sourcing for other people, or are you kind of enjoying, you know what, I don't necessarily need to do that now, so maybe I'll concentrate on just on my own business for now, or where's your where are your thoughts at the moment?
Definitely the latter. I think for anyone who's kind of been really involved in multiple renovations at a time, it comes with a lot of stress. And now that stress is 1000% worth it. I personally believe if you have the asset on the back end to keep paying you monthly, or you make kind of a nice chunk. Um, yeah, I'm just happy doing what I'm doing. We've got a lot of other projects on the go. Yeah, happy kind of going down the route I'm going to, and hopefully in the future, if it wasn't for COVID, I'd like to move on to bigger commercial stock now. But we'll see. Give it a year, 2 years, and we'll kind of slowly get onto that.
Just see where things go. So yeah.
Yeah.
Okay, well, look, it's been a total pleasure still catching up with you today. If people are watching this or listening to this or reading it in the magazine and they want to reach out and just, connect with you or follow you and see what you're doing, is there a best place for us to direct them to? How can they sort of do that?
Yeah, sure. So Facebook and Instagram, really. That's kind of how I connect with everyone. So my Facebook is Tom Henderson. Just we'll likely have mutual friends if they're in the property circle. So just give me an ad on there. Or Instagram, I believe, is Tom Hendo Property. Yeah, give that a follow.
And at the time of recording, both Facebook and Instagram are operational. So it's back up and running. Small blip earlier on in the week.
Yeah. It was a breath of fresh air, and honestly, I could it was like being thrown back 10 years, wasn't it?
Yeah, it kind of was. But at the same time, certainly in our gym business, we do a huge amount of advertising on Facebook. So we were like,
oh, wow.
What's happening? But yeah. So, look, it's been a real pleasure sort of catching up. And let's not leave it another sort of 3.5 years. It's been a pleasure today. So thank you for your time. Thank you for sharing. Thanks for sharing these case studies. We couldn't do what we do with the magazine without the input of people like yourselves. People are out there actually, walking the walk out there and talking us through real life deals. So it's always appreciated. Thank you.
No, thanks for having me on. It's been great.
Okay. So